Welcome back. The moves of the biggest fund managers in the world were revealed in filings this week. So we saw how Warren Buffett, David Tepper, and others are playing the market. And we're going to trade those moves in a special 13F edition. And we're calling it this time 3 bails and just 1 buy. Joining me now is Lee Munson, Portfolio Wealth Advisors President and CEO. He has our trades. Lee, welcome.
Thank you. It's great to be here.
It's great to have you. We're going to start, and good job everyone who guessed this. It wasn't too hard of a mystery chart. We're going to start with NVIDIA. Is the trade still Teflon? Appaloosa's David Tepper made it his top holding last quarter, increasing his stake nearly 7-fold to over $400 million. He added some other semi-names too. It is about 10% off the year highs, but still on a monster run. Why are you bailing here?
I'm bailing for a few reasons. Even if you look at the math, and you look at the valuations, if we presume this is going to be a $325, $350 million market in less than 10 years, and NVIDIA controls it all, you're still around, even at this price, you're at a 95th percentile of valuation going forward, right? So, and I'm looking at the 95th percentile based on NVIDIA being an apex predator. But it's not just the valuations, because we know they're going to bring it. Foundry is not an insignificant risk. You've got Taiwan Semiconductor that's making all these chips for NVIDIA. They're in Taiwan, right? If you listen to Taiwan Semi's quarterly calls, they've already said next year, we don't really know how much of this stuff we're going to be able to build for NVIDIA. It's still unclear. And then look at the news from Wednesday. Intel hit the brakes again on their turnaround story that never does. Why? Because they were trying to acquire a tiny little foundry out in Israel. And because of U.S.-China relations, that deal fell through. So I think going forward, getting the stuff to market is going to be important. And by the way, if you're really into the math, people should look up the stock-based compensation of NVIDIA, really understand what the real costs are. That free cash flow starts to dwindle quickly.
Well, certainly they would probably have earned themselves a lot of lumping NVIDIA in with Intel is not, if you want to go there, you can go there. Bailing on NVIDIA after a move like this, listen, it's probably prudent practice at this point, but it's still a controversial one. Next one might not be quite so controversially, but let's talk about it anyway. Expedia, which big short investor Michael Burry just added to his portfolio last quarter. It's been down 19% after earnings 2 weeks ago. Its worst day since the pandemic lows in March 2020. This one, why are you not a fan?
Well, listen, I love Michael Burry. We all love him. I'm a value player at heart. And so all this tells us that officially, now that Burry's involved, it's not a tech company, it's a travel agency. So they couldn't make the earnings work last quarter, okay? They had everything, all the wind underneath their sails. But they've got this thing called the One Key Initiative, if you really kind of dig down in this thing. What they're trying to do is they're trying to tie together these very different brands that they have, Vrbo and Expedia and hotels, all this stuff. And they're going to offer a whopping 2% discount to try to get that brand loyalty. Here's the issue. You're competing against the points economy. I mean the credit card points economy. Airlines, it's a lucrative thing. They're going to keep pushing it. The banks, they love it. And as more people are traveling, they're starting to get wise because everybody's starting to travel a lot more in a short period of time. They're learning what business travelers know. That if you like a hotel, you book direct. Any Google search will tell you it's going to be the same price as Expedia these days. And then they offer perks like free Wi-Fi, late checkout. They don't nickel and dime you. So I think Expedia is one of those things where it's gone from a big Silicon Valley love fest down to kind of a mature company that's going to have loyalty. Why would they do One Key if they weren't concerned about brand loyalty? I think that this is going to be a headwind going forward. I would rather look at this when the valuation is much lower, close to debt.
Yeah, and it is interesting to watch how well Booking is doing by comparison. A lot of industries seem to have these kind of winner and loser tales this quarter. Our last one is really in the news this week in particular, CVS. And that was also another ad from Michael Burry last quarter. It's paring some losses after posting its worst day since October yesterday. On that news, it's lost its spot as California's top pharmacy benefit manager to Amazon and to Marc Cubans Cost Plus. Is that why you're out? The stock's down, about 28% year to date.
I mean, at some price, I'll buy anything, right? Like I said, I'm a value player at heart. I'm not sure that most investors know that CVS isn't really just a local, like, little drugstore like Walgreens. Right. Half of their revenues are coming from this. So when Cuban has his passion project of revolutionizing, the pharmacy benefits management business, he really means he aims to destroy it. And he just drew first blood in California. I think this is going to be a trend going forward. And it's not that people don't need a local pharmacist. I have a lot of, retired clients. They have complex stuff. They need to see somebody about that. But when it's half your revenues, you have to start thinking about how much do I want to buy for this. Another thing we miss, Oak Street. They just bought this thing back in May. They're going to be slashing thousands of jobs. Why? Because it's a tough competitive business. For the 5 years ago, 4 years ago, 3 years ago, every time I meet an entrepreneurial doctor, they want to immediately pitch me on their urgent care business that they want to do. In the last year or so, no doctors want to get into that business because I don't know where you are, out in the tri-state area, but out in New Mexico, there's urgent cares everywhere. The hospitals are getting into the business, entrepreneurial doctors, and now Oak Street. So I think they're really late to that game. So it's not that CVS is going to go away, but this is a story about half their revenues are really at risk. I would wait and see. I'd love to buy this at I'd like to buy it when people think it's game over.
Yep. All right. So then move on from the bails. There is a buy-in here, and you're following Warren Buffett. When I saw this headline about Berkshire in the home builders, I was a little surprised. Okay, let's lay it out. Buffett or Berkshire bought more than $700 million of D.R. Horton last quarter and other home buyers. Of course, as we know, listen, I'm not going to say this, but I'm going to say it. The time to buy them, Lee, was a year ago when they were trading at 3x. Yeah. But that's not to say, listen, they bought Apple way after, and they've crushed it. So, D.R. Horton, why do you think now is a good time for you, for them, for anyone to be a buyer?
So you're absolutely right. I mean, you and I were talking about last summer, and I said, oh, you might want to dip your toe in home builders. Yes. It seems so scary. I can't believe that trade worked out. Even I was like, I don't know about it. I don't know. I think I'm early. I was not early. We've got 30% of all new or all home sales coming from new construction. That's over twice the historical norm. Now, we can say that it's a lock-in effect. Nobody wants to lose their 3.5% mortgage. That's not really what's going on. What's going on is the ratio of adult children living at home is plummeting like a SPAC right now. And that's not simply a COVID thing. It's that millennials were staying in school longer, they were staying at home longer, but eventually they all get married, they have kids, and they become their parents. We just don't have enough units. So the reason D.R. Horton versus the other group, versus saying buy the home builder ETF, which would sort of be my first thing, if you're going to go in now on a big secular move going forward, you got to be with the 800-pound gorilla, because the one thing we need is as many units as possible. So if you go with the big players, there's safety and size. I agree. The move has been made, but I think it's now time to consolidate up into the big player and let all the small guys fight for the rest. So I don't think it's without risk, but it's the only thing I really like. And it is funny because traders always we always try to kind of goof on Warren Buffett, because oftentimes we'll get the 13F and we'll say, didn't it already move? We said the same thing about Apple years ago.
100%. Lee, thanks for your time today. Have a great weekend.
Thank you.
Lee Munson. Still